Rohr here with an early, concise update on Friday, September 5th, 2014. It's currently 6:15 a.m. and this is going to be a concise update because the equities and the fixed income markets are substantially conforming to the kind of performance we had expected in Thursday morning's extensive global view. And we're going to focus on the foreign exchange today because it had such a dynamic move in the wake of the ECB action yesterday. So here we are and have to ask, what does all this mean to the trading in the markets? And for right now, what we have is a U.S. S&P 500 on further geopolitical tensions, weakness in Europe, and especially the concerns over events in the Middle East and Ukraine, off quite a bit today. We're down about $7 and down around that support in the 1990 to 88 area already this morning, which will make the market response and activity in the wake of the U.S. employment numbers in a little over an hour very important. If we're much below 1988, this market has further support, but even though there's a Fibonacci level here at 82, the next big support is not until 1978 to 75, and that's the top of a significant old trading range congestion on the weekly and daily charts, and we'll be revisiting that shortly. And if the market should get a very strong response to the U.S. employment report, your topping line and oscillator resistance are still right up into approximately 2015 this week, moving up to about 2020 next week. So it's going to be very interesting to see how that works out. And in terms of the indicators, with the market having churned sideways, even a bit more volatile fashion, again, the somewhat euphoric response to the ECB early yesterday, but the global situation weighing on the S&P again, knocking it back below this down break going back to Tuesday at the 2001 area by later on in the day, means the short-term indicators aren't telling us much. You know, the hourly stochastic, MACD, and even the RSI have not given much of a critical signal at all. That may all change after U.S. employment today. And that's about it for the short-term view of the S&P 500.